Hello and welcome everybody to today's edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Before we start, remember to follow us on all our social networks, Facebook, Twitter and Google+, and to catch us every day by logging onto our website, mexiconewsnetwork.com, for relevant stories and news. Now let's go to the information. If US President-elect Donald Trump succeeds in his threat to eliminate the North American Free Trade Agreement, it could chop nearly 3% off Mexico's gross domestic product, the head of the UN's Latin American economic arm said last Wednesday. That threat, combined with various other pledges by Trump to battle Mexico over trade, investment, and jobs, have pushed a growing number of companies operating in Mexico to put expansion plans on hold until Trump fleshes out his policies. We've estimated that if NAFTA were eliminated in its totality, taking into account second-order effects, the GDP fall could be around 2.7%, Alicia Bárcena, Executive Secretary of the UN's Economic Commission for Latin America and the Caribbean, said during a presentation at the body's headquarters in Chilean capital, Santiago. So there you have some of the risks that could be important and could even bring the Mexican economy into recession. Around 85% of Mexican exports by value are delivered to NAFTA trade partners, the United States and Canada. The Commission predicted the economies of Latin America and the Caribbean would grow 1.3% in 2017, after contracting by an average of 1.1% in 2016. It said the economy of Mexico would grow 2% in 2016 and 1.9% in 2017. Following on from this story, for those of you following Mexico's international trade talks, you'll be aware that Mexico's foreign ministry is exploring ways to reduce Mexico's economic dependence on the United States, out of fear that access to its number one trade partner will be restricted by protectionist trade policies mandated by President-elect Donald Trump. Well, some encouraging news has emerged resulting from trade talks between Chinese State Councilor Yang Jiechi and Mexico's Foreign Minister Claudia Ruiz Massieu after their meeting that took place on December the 12th. Their meeting included discussions of enhancing trade and investment ties, as well as improving flight connections between the two countries. They agreed to deepen mutual trust and develop the bilateral dialogue about subjects of mutual interest via the Mexico-China Strategic Dialogue, the ministry said, without giving more details. After his meeting with Ruiz Massieu, Yang had a courtesy visit with President Enrique Peña Nieto. The Chinese government has bristled at Trump's moves in recent days, protesting his decision to accept a telephone call from Taiwan's president and voicing concern after a weekend interview on Fox News Sunday in which Trump questioned whether the United States had to stick with a one China policy. China considers Taiwan a renegade province. Mexico's relationship with China appeared to cool after Peña Nieto scrapped high-profile rail and retail projects that were supposed to usher in a new era of business between the manufacturing rivals. But Mexico last week awarded 2 deep-water oil blocks to China's offshore oil corporation during an historic auction that was part of the country's energy reform. The China-Mexico relationship is back on again, said Evan Ellis, a research professor at the US Army War College, who specializes in China's presence in Latin America. In other news, retailer Wal-Mart in Mexico has announced that it will invest $1.3 billion in logistics in Latin America's number 2 economy, in what is perceived as a show of commitment to Mexico at a time of uncertainty. The investment in Mexico will not result in any jobs being moved from the United States, Walmart spokeswoman Joe Warner told Reuters. The investment is funded by Walmex and is necessary for expansion of Walmart's Mexican business, she said. A large part of Walmart's investment will be over the next 3 years, including in back-end infrastructure, said the company's chief executive, Guillermo Lorero. He said it would create some 10,000 permanent new jobs. It will involve the building of new distribution centers as well as the expansions of ones we already have, he said at an event with President Enrique Peña Nieto at the president's office. Lorero also said the company had already invested 80 billion pesos, that's around $3.93 billion, in the past 4 years. Wal-Mart is looking to double sales in Mexico by the year 2024 by boosting its core business of running discount retail and membership stores and expanding its fresh food business. In August, Breaking News Business reported the sale of its Suburbia clothing chain to El Puerto de Liverpool for approximately $852 million in order to streamline operations in the country. At Walmart's shareholder meeting in June, David Cheesewright, head of the overseas division, singled out the Mexican market as a top priority. Mexico has Walmart's largest number of stores outside the United States, and Walmart has struggled in overseas markets, including Britain and China. But Walmex has remained a bright spot, with third quarter revenue growing 10.8% to $6.25 billion. And finally, let's take a look at the markets. The Mexican peso decreased 0.05% to 20.37 from 20.38 in the previous trading session. Historically, the Mexican peso reached an all-time high of 20.77 in November of 2016 and a record low of 0.01 in May of 1972. IPC Mexico decreased 0.5% to 44,895 from 45,121 in the previous trading session. Historically, the Mexico stock market IPC index reached an all-time high of 48,694.9 in August of 2016 and a record low of 14,008.2 in August of 2005. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. Remember to follow us on Facebook, Twitter, and Google+, and log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.